Alright guys, what's going on? We're back with another trade recap. Now let's get into it. Now we took a trade on NQ. Today was a very volatile, I would want to say. You know, we kind of shot to both sides very fast on the chart, especially with the I'm pretty sure with the PPI report creating that data high right here. Now we're looking at a pre-recorded video. This is a video of the recording I took while live trading. So this is the data high, as you can see. Also data low down here, and these are just good to mark out because they can be a good draw on liquidity. Now, as before in the last video, this is the opening range of the regular trading hours. So I have that graphed out, and we just swept this minor sell side liquidity. So I'm just giving some context to what we're going into today, and we'll soon see how it all played out. Now we do see SMT on the 15-minute. Now let's get this started. Let's jump right into it. So I mark out the minor sell side liquidity, of course. Right now we're pretty much at 50% of the regular trading hours gap, and we kind of reject off that while taking the minor sell side liquidity. Now right here, I make the call that I want to see price close above this SIBI again, like how it happened in the last trade recap. Now we do get a close above, but the thing was I wanted to put on like 3 cons right here, 3 contracts. I decided to just put one when it opened up to a new candle above the SIBI, and I put one at consequent encouragement of the now inverse fair value gap. But price did not hit this other contract, and it kind of sucks. You know, looking back on it now, maybe I should have led with 2 cons and 1 contract with the consequent encouragement, but prices shot up towards our target initially, and you can see my my stop loss was at the bottom of this candle previous to the candle that broke through the SIBI. Now you see me raising it up as we're getting closer to TP. Now that's something I like to do when we're 75% away from take profit. I'll just move my stop up at least halfway or even break even. Now over here, see, that's where I checked for 75%. Now if you see over here, when we pan over to it, the SMT, we take out right here. Let me go back to that. We take out the shorter high of the 2 highs that make the SMT, but we don't take out the higher high of, wait, oh, I'm tripping. Okay, we don't even touch any highs that are correlated with the SMT. I'm talking about this very short term 5-minute high. We swept it, and price just called it good from there pretty much. We swept that buy side liquidity, which is very minor. I mean, it was at 9 o'clock or right before 9 o'clock. And price did not decide to take out that high that I was targeting. So we'll see price go up again. You know, I'm really like, oh yeah, TP's gonna get hit. We're chilling. I walk away. I legit walk away. I'm like, oh yeah, TP's gonna get hit. Price comes all the way back down and smacks my stop loss, bro. And it's like, you could think like maybe we're coming back to rebalance this FEG in here, or we're just tapping into this OB right here possibly. But no, we break right through it, and we're about to see it right here. You know, this keeps edging us right here. This gets closer and closer. Then bang. Got stopped out right there. And this is where I come back. I'm like, what? How did I get stopped out when price was this close to my TP to take out the data highs? Because I was kind of expecting the data highs to be like a magnet. And I was expecting my TP to get ultimately hit, but no. So now we see price has made a lower low, lower high, filled this FEG, this tiny little 1 minute FEG on the downside. price obviously goes lower. Now that's just one trade that we put on today. The other trade is going to be short. Now this trade that I put on just now wasn't bad. It wasn't bad at all. Would I have taken profit right here in any world? Most likely not. I just think it was that type of day where, hey, you get stopped out at break even. It happens. So we see price break down even more. Let me see if I can skip ahead. Okay, this is where I set my entry. So let's kind of break this down. We're on the 1 minute right here. Over here we're on the 5 minute. So the 1 minute shows an FEG, a bearish FEG, right at these kind of order block wicks. So I'm very much favoring this entry to the downside. But what on the 5 minute I don't see is that we have an FEG up here unfilled. Now usually I honestly don't expect FEGs so far up here with all this noise over here to be filled. I fully decide them to be breakaway gaps. But we will see. We'll see what happens. We'll see what happens. I'm telling you, I most likely told you just now what happened. But we'll see how it plays out. So it looks like we rejected off this order block right here to the downside, or breaker block as I should say, creating this tiny little high. Break down even lower. Now right here I'm looking for an OTE plus FEG entry. And I'm looking at the 5 minute. There's a FEG right here. I'm like, great. I can kind of match that up with my FEG that I have on the 1 minute sort of. But I favor the 5 minute FEG obviously, so I place my entry at the top of this 5 minute FEG. And price is so close to the sell side liquidity we're using for the drawn liquidity right now. But I want to note something really quick. You see how price pretty much to the tick hit the bottom of the regular trading hours opening range, fulfilling this gap. Okay, now I was looking at this recording earlier and I was thinking this could count as possibly some, like, I would compare it to maybe external liquidity, an external liquidity take to internal price. That's what I think of it as. But it was just something interesting I found while I was looking back at this recording, and that's why I really like taking these recordings, because it makes me really analyze like what I was thinking, what I was truly thinking. Now here you see I use this high as my stop loss as we fill this FEG. This is something I like to do, but yeah, it is something I like to do. I like to use either when we retest when we test an order block, or when we fill an FEG, I like to put my stop right above that high that's made, because I feel like it's good protection. And if it gives me the opportunity to, I would like my stop to be generally around the new high that was created. So right here, it's not really a new high because we have data highs, but the higher high that was created, I would have liked my stop to be around here, because right here you're pretty much safe from anything. And if your stop loss gets hit, you're basically ultimately wrong. Okay, you can be sleeping good at night knowing that, hey, I was ultimately wrong. You know, price wasn't going to go in my favor either way. I got stopped out. So that's why I would like to have my stop loss up here, but I decided to go for a better RR trade and decided that would be my stop. So price has now filled this opening gap for the regular trading hours and is now about to take this high and go into this SIBI. So let's see how it plays out. So we tap a little bit in the SIBI, Already see some rejection. Let's see this candle fully play out. Now we're on the 2 minute. Now this was a 2 minute civvy. I totally forgot about this. But I switched up to the 2 minute because the 1 minute FVG wasn't really aligned with the 5 minute FVG. Alright, so there we got our entry. I'm setting stop loss, TP. Now I'm looking for possible deeper targets as this trade is on. I'm looking for where I want to put my final TP, and I put it under that low. Just a random low in the middle of taking out the official sell side liquidity. Now, as you can see, let me pause this real quick. We have price close above this civvy. Now, what do I usually do when price closes above a civvy? I go long, and I'm in a short position right now. So things aren't looking too hot. Right now, I'm thinking, okay, this maybe could count as a little breaker right here. All right, price just wants to fill this breaker. And that's kind of my backup PD array in this environment right here. So let's just keep playing. We'll see how it plays out. Dialing down to the 1 minute, checking it out, seeing if we have any sort of protection that would help us. And as soon as I saw this BISI being respected, I knew I was done for. I knew I was cooked. Boom. Now I do have this personal daily loss limit on my account, which, as you can read, temporarily deactivates my account, so I can't proceed a $250 loss. Now I think this is a really good thing to implement in trading, and I'm really glad TopStep X has this on their platform, because it's honestly, I can see it being very helpful for new traders and people that get very emotional. Alrighty guys, now this is what it looks like on the chart. After the day is finished, we finished with a significant drop to the downside, with our stop getting hit on shorts. Sadly, we had the correct bias, but this trade was just not in our favor, and we should have reconsidered our stop placement, as we can see. Now price did reach into this 5 minute fair value gap. That was a bit higher. That was really past all this noise. I'm surprised price reached so far back into this right here. This is basically a breaker. Reached so far into this breaker, and it did not sweep this high, but it did stay within this 5 minute gap. It closed in this 5 minute gap, which is just nutty looking at the wicks on this thing. Like, you would not expect this to be fully respected, and it was. And it shot to the downside. Now let's see if my TP I had. So my final TP would have been down here. It would have got hit. Now that is, hey, it's disappointing, but you gotta learn something. Tomorrow's a new day. We'll go at it the same as we did today, but with more precision. You know, we learned a little lesson. I think the lesson for today was always favor your stop placement over the trade itself. You know, obviously any trade that you want to get into, you want it to hit TP, but you're honestly not thinking about the stop. You're just thinking about the entry. That's where I think I went wrong. I chose this I chose this short entry that got hit when I could have waited for this 5 minute fair value gap up here. Could have got OTE, FVG, my bread and butter, right here, and had a safe stop all the way up here, where if price reached to this level, I would have been totally fine of it taking me out and I would have understood that, hey, I was on the other side of the market today. That's reasonable. But here, since we were trying to go for RRs and get a little sleek entry in right here, we got wrecked. Even when our bias was short, you know, our bias was correct and it got wrecked. You know, that happens. It's whatever. On this other trade, we got break even, which is, you know, it's disappointing, but hey, it's not no. And yeah, I guess that's it. I hope you guys enjoyed this. This was the trade recap, and I'll see you guys later. See ya.